Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar continues its positive trajectory with all eyes on the key level of 63 figure 30, which is seen as the 60-day simple moving average. A break above there would give further scope and also confirm a stronger bullish bias and look on towards 64 to 66 as a potential target. Given the fact the market has responded quite well from the rejection of 61.5, and also we're seeing more in terms of bullish candles to bearish candles, let's see if the market can break higher. But first, let's see how it challenges towards that top side level, with any pullback likely to be limited at 62.45 and a base around 61.80. This week, all eyes will be looking to Fed Chairman Jerome Powell's comments on tariffs and inflation when he testifies before the Senate Banking Committee later today. His remarks will be closely monitored, and expectations for the Fed to keep rates steady in March were reinforced after Friday's mixed US employment report, the non-farm payrolls, with the odds of a 25 base point cut staying below 50% until June. As I mentioned, this week's inflation report will be the key as it may influence the Fed's decision ahead to rate cuts. Turning to euro, the market is somewhat weak but still holding above the level around 102.75. And anywhere further to the downside should find demand closer to that 102 figure 30. Overall though, I like the way this market is shaping up, and with the limited momentum when it comes to weakness from MACD, I feel there could be a surge to the upside if we see a break above 103.60 and then look on to 104 and possibly up to 105. When it comes to dollar yen, it seems the traders have hit the brakes on the yen strength. Nevertheless, the market is still in a prime position to take the challenge towards that call of 149.2060 area. Any upside attempts beyond 152 should find resistance around 152.5 to 153. Sterling weak for the fourth consecutive day, but overall though, I feel the market might be preparing itself for a rebound that could see a rally on to 125 to 126. I'm a little bit cautious of getting negative down here, and let's see if the demand can overthrow the weakness. The precious yellow metal, well, it's all mixed at the moment as the market took a surge towards a record high of 2,942 and then quickly reversing. Keep an eye on this candle. It may end up as a gravestone doji, and if so, could give weakness into tonight's session, and that is when the European session opens. Support at the moment comes in roughly around the region of 2,899 to 2,888, but the broader trend is way away, which is around 2,800. Given the fact this market is still relatively strong and the trend is overheating, but there's still a call to $3,000, which isn't too far away. Let's see if we can get there by this week. And wrapping up with oil, the bullish divergence kicked in quite aggressively and now breaking above $72 exposes the next target of $73.30. A break beyond there, little call until $76 a barrel. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoy the great start of the day.